Hi, this is Chris Condon with John Greene Commercial and PropertySearchSimplified.com, helping small business owners throughout Will County find and buy the property that they need to continue to grow their business. Today I'm joined here with Erik Schelling with M&M Bank. Today we're going to be talking about commercial financing. A lot of the people that I work with need help in finding lenders to be able to finance purchases like we're talking about here. I've asked Erik to come in and ask him a few questions, kind of explain the process for us, and hopefully give you some insights and some tips that are helpful as you go through this process. Erik, just wanted to take a couple of moments to ask you, what is kind of the best way to choose or evaluate lenders in the marketplace and which one to go with?
I think it's important to understand that there's so many different shapes and sizes lenders come in.
Sure.
If I were looking for a commercial property, some things that would be important to me would be having latitude with your lender, and that lender then having latitude with the decision makers.
Okay.
So of course that means that relationship is so important.
Sure.
You've got to develop a know, like, and trust factor with that lender. Sometimes you can do that quickly. Of course, you'll know as soon as you speak with one.
Oh, yeah.
The decision-making process needs to be something that is simplified by virtue of, does that lender have a process by which they can approach the decision makers, influence the decision as it needs to be influenced, and then get a quick answer. Of course, then you can get back to that borrower and let them know, this looks like a great deal, or here's a couple things that we'll do additionally to make sure that it's a great deal.
Excellent. Great advice. Great advice. I hear that all the time. Kind of one of the biggest complaints I hear with borrowers trying to get approved for financing is just the process takes too long. It's too complicated. So I appreciate that. A common question that I get is there a way to get somewhat similar to a pre-approval on a residential side on the commercial side? Any suggestions or thoughts on that?
As far as a pre-approval goes, it's not like when you're buying a property, that you're going to live in, a
Right.
home.
Okay.
I would probably approach it more from the standpoint of you're looking for more of a pre-qualification.
Okay.
And that's important that on the front end, you're selecting that lender, as we just alluded to,
Right.
and then submitting documentation up front that solidifies or presents the strength of that borrower.
Okay.
So I would go to my lender and I would say, okay, I'm looking to buy a property. And they would, of course, come back to you with a list of things that you should get, not
Right.
too dissimilar to a pre-approval
Okay,
to buy a
sure.
house. But then the underwriting can happen either at a cursory review or sometimes in a more in-depth. But however, you're probably going to get something called a pre-qualification.
Okay.
It still accomplishes the same means
Yeah.
to an end.
Right.
And you can walk in with some confidence that your lender's behind you.
Yeah, it's basically saying we've looked at your financials. Conceptually, this makes sense. At this type of price and terms, we're willing to provide financing for this purchase.
Correct.
Okay.
Correct.
Excellent. Can you take us through what does kind of the lending side of a real estate transaction look like? Maybe from contract all the way to closing. We're seeing that take somewhere between 45 and 60 days now. Sometimes it's 90 or maybe even 120. I guess what needs to take place in order to go from contract to closing where it can fund and actually close?
Well, again, as we talked about, getting that pre-qualification, getting the ball rolling is
Okay.
important up front.
Right.
And by the time that you've either got a letter of intent or a contract, there's already some process in motion.
Right.
What you can expect is to give several pieces of paper to the lender.
Right.
Some of those things include your personal financial statements,
Right.
so they can see your strength.
Right.
Proof of your liquidity, so they can see that your equity injection is there.
Right.
I would say that, without any exception, you're going to provide 2 to 3 years of financial statements,
Sure.
tax returns.
Sure. Pretty typical.
There is typically some additional documentation that you would present in terms of perhaps year-end and year-to-date statements,
Sure.
a balance sheet and a profit and loss.
Sure.
These things are important because the lender is not just going to say, okay, well, the bottom line plus the interest and depreciation, as everybody calls EBITDA, makes sense. No, they're going to actually underwrite you and look at all of the factors
Right.
that present themselves in terms of getting approved. From said point that you've presented those, the lender's going to take those, they're going to underwrite them. They're going to come back with questions. Most of the times you're going to know all the answers because they're things that are very personal to you.
Right.
If then at that point the lender's able to give you a conditional approval. You'll be able to see exactly what it is that they need to get through the rest of the process. But in the
Okay.
meantime, they're going to order probably the appraisal first.
Right.
I think it's important to understand that in appraisal, it's not like you'd expect on a residential front.
Right.
There are different approaches to value, and it's a
Right.
pretty comprehensive document.
Right.
In today's environment, of the three approaches to value, which is the income approach, the sales approach, and the cost approach, you'll typically see the first two.
Right.
They're most applicable.
Right.
And of course, as we both know, they're going to look at what the recent sales have been in the area, and then, of course, if that property was for lease, what it would garner.
Right.